Mode.
Well, good evening, ladies and gentlemen. Welcome to today's Inner Circle. Something a little different today. I hope you're well. I hope your week has been good so far. Apologies for the slight switch of day from the usual Wednesday to a Thursday. Or normal service will be resumed next week. But I'm glad you made it, and of course you can catch up and review on YouTube. Some of you are watching on YouTube. For those of you who are doing it, don't forget to like and subscribe so you don't miss a show. Not only, of course, Inner Circle sessions stream there, but also, of course, the live market updates on a Monday and a Thursday. So always great to see you here whenever you could make it along. And today we're looking at something called hybrid trading, which is really an approach which many of you know that my interest has been captured over the last months, many months now, into the world of EAs and automated trading. But I figured it was about time I took a step back and re-looked at some of the discretionary stuff as well, because many of the tools that we've been looking at and developing sort of fit with this idea of a hybrid approach. And I'll explain as we go why I think this could be a revolution in terms of how people trade. Obviously, we've got to start off by popping up this little important message just to remind you that this is for educational purposes only. Please make sure you do your own due diligence on anything you see here. Make sure that you follow trading plans. Make sure that you manage risk. That's profit. That's on entry and exit. Profit and capital risk on every trading action. Personal trading objectives and financial situation. So for those of you who are newer or watching on YouTube or watching the replay on YouTube, what we always do with these Inner Circle sessions is we have a little bit of just a whiz around markets just to see what's happening, maybe even pick a chart of interest or chart of the day, if you like, that looks to be interesting. And of course, then we get into the educational content. Wayne's been disparaging. Mike's been converted from a discretionary trader. I'm taking a step back. I didn't think that October could be Mike's discretionary. Anyway, thank you to everybody who said hi in the questions box. So good day to Neil. Glad you made it to a session, buddy. Hi, Sonia. Thanks for the heads up on the AV, Wayne. Good day to Keith as well. Please feel free at any stage to ask questions. It's your session, and I'd rather you got out of it what you want to. And of course, you asking questions helps me move the thinking to the next level. So some of the ideas you will hear tonight may be very, very new to you. My job is to make them less scary and make the complex a little more simple, is the aim of the game. So, g'day, Ian. Good to see you here, mate. Right, okay, so let's start, as I said, by having a look around what's happening in markets right now. So I'm going to look at sort of a few things in the wrong order, of course. So I'm going to look at gold first of all. And now gold is doing exceptionally well. We're new record high after new record high. Let's just check out a chart for right now, and I'll show you what's happening with gold. So we breached this key level at around about 34.35 a couple of weeks ago now, and we've just continued our way up. Just a little pause, just around this 36.40 level over the last few days. Now, this doesn't surprise me at all. If we look at the hourly chart, you'll see just a pullback, perhaps in anticipation of what's happening later, which I'll talk about in a moment, but we're in a range. You'll see this is a repeatable theme as we look at charts, but whichever way you slice it, gold is doing well. Why is gold doing well? Well, inflation is proving to be sticky in the US. The US dollar, as we'll see in a moment, is playing with support. It is in a range, but it's playing with support yet again. Of course, that data that's out later tonight is going to impact on this significantly. So the safe haven, the inflation hedge, and the US dollar weakness is all contributing to the price of gold. That's what's happening. and I don't see it stopping, to be honest. Um, uh, let's look at tariffs now. The tariff chatter, obviously, a lot of it's died down. There's a big pause on at this stage till middle of October. I think it is October the 14th when the next pauses are due for another look at. Now, of course, there's been all the potential court rulings or the appeal court ruling, in fact, that the tariffs were illegal, that Trump shouldn't have used his emergency powers to put them in place, which has caused a little bit of angst. It's now with the Supreme Court. I'm sure they'll find a way around it. Obviously, Trump's loaded the Supreme Court with his favoured judges. But whether they go on or not, what is the sort of news over the last week has been around about India. Who Trump is very unhappy with India's relationship with Russia buying their oil, and of course China has slapped 50% tariffs on India and suggested that they are going to get 25% tariffs on buying Russian oil. I'm not sure how he'll action that, but of course that and the geopolitical situation, not only Israel smacking Qatar with an airstrike trying to take out some Hamas negotiators who are trying to sort out a peace deal, has upset the Middle East overall. And of course, the Russian-Ukrainian issue is still going on, with Putin sending some drones over Poland, which is testing the resolve of the EU. On top of that, Trump is now talking again about additional tariffs in Europe and potentially putting tariffs on Russian oil imports. That the Eurozone should be doing that. So it's still bubbling along under the surface, but of course, we all wait for the Supreme Court to make their decision. Thank you very much, Michael. I hope you're well too. So the headlines really are around. I mean, the other headline today is, of course, the tragic assassination of Charlie Kirk. If you're at all interested in the American scene, Charlie Kirk was a major social media influencer, very much on the right. Was shot at a university event. Now, much as though I disagreed with just about everything that Charlie Kirk stood for politically, there's two things that are clear. First of all, there is a scary, very scary situation occurring in the US. The fallout from this may be significant, and I hope it serves as a catalyst to calm down the rhetoric a little bit, because the polarization is just bizarre. I mean, that seems to be the way of the world right now, but it just has to stop. Not on the headlines was another school shooting in the US, where 4 kids were killed, which is equally, if not more, tragic. But of course, thoughts with everybody affected by those events. Charlie Kirk had a wife and 2 very young children, and you can't begin to understand how a set of political beliefs can result in this sort of thing. It's got to stop. It's got to stop. But as I said, thoughts with everybody concerned with that. Even though it's on the other side of the world, we're seeing signs here of a similar path that we may be taking. I was listening to Sky News today. I popped in, and I wish I hadn't, because I just can't believe what I hear sometimes in terms of some of the dreadful rhetoric coming out of mainstream media, never mind social media. Anyway, another story for another day, but tragic nevertheless. On the market side of things, the big news today is that CPI number that's coming out later this evening. On top of that, we have the ECB today, who paused rates as expected. And let's just have a look at the FX data. who haven't paused rates yet, but are due to meet very soon, actually, in 4 minutes' time. I think, if I'm no, in a couple of hours' time. But they are expected to pause. But it's that CPI number that's going to be all important today. At this stage, the Fed implications of that. This is what September, next week's rate cut is looking like. It's 92% of a 0.25% cut. The expectation is that it won't be 0.5%, although some commentators and Donald Trump are both suggesting that 0.5% will be good. But the likelihood is at this stage, there's a priced in another 0.25% for October. Much will depend on that number. But if we look at that, what's expected from that number, we are expecting a tick up in both the month-on-month and the year-on-year. If we do get that and potentially more, and this is a tariff-orientated, arguably a tariff-orientated inflation, then the markets could do pretty poorly, actually. We may get the pullback that we've been waiting for throughout the summer over there, for the northern summer. Also interesting tonight is the weekly employment numbers coming out of the US. In light of weak jobs data that we saw in the non-farm payrolls, it'll be interesting to see if that contributes at all. Normally the weekly employment at best causes a blip, but it'd be interesting to see if that contributes to the general bad vibe that's going on under the surface, despite Trump's lies about where things are at, sacking his statisticians because of giving him the numbers that he wants. These are critical. So I was going to run a session, but I've just run out a little bit of energy. But if you are around and about 8:30, I might pop up some stuff on Discord for those of you who are part of that group. Anyway, that's where it's at. So we're not seeing the pullback yet, but we're just waiting for a catalyst. Normally, as those of you who popped into Cameron's session yesterday will have heard, normally September is seasonally the worst month. But we haven't seen a pullback yet. If we look at the major indices, where's the pullback? Is the US 500 futures contract. Record high, record high, record high. I mean, it is crawling up. The reality is that we've been actually quite choppy, not even volatile, but quite choppy between in a range over the last month, really. It's not been very good for EAs. But being quite choppy in that range. You can see how low the volatility is on the daily chart compared to where we were here. So we are low, very low volatility, which doesn't, although markets are more calm when there's low volatility, of course, we depend on volatility for opportunity. But whichever way you slice it, markets are doing very well. If we look at the NASDAQ, a little more choppy because it is responsive to rates. But if we look at this, you can again see that today's futures contract is edging over that record high, quite remarkable, and over that, heading towards that 24,000 mark on the NASDAQ futures contract. So we're not getting the pullback, but maybe tonight's the night, because it is the CPI that's in focus and the Fed implications of that, as I've already seen. So let's just have a look at a couple of charts. Very flat day, all in all. I've shown you gold. The copper's range bound. Now, oil's picking up because of that Middle East situation. We were threatening support at the back end of last week, but Monday, Tuesday, Wednesday, since Israel did the Qatar thing, then we've seen price rise a little bit. Bitcoin is also one of the assets that has done pretty well this week, along with gold. Seems to be pulled up a little bit, perhaps in anticipation of more Fed rate cuts, or that increased likelihood of a Fed rate cut in October that we're now seeing. That's now pushed through that 112,500, which was a resistance level for best part of a month, really, and we see continued buy-in today in the early part of the day. But you can see now we're moving into that pre-big data range-bound stuff that really says we need to wait for some more information to come through. If you are watching this on a replay on YouTube, this is our market wrap. We do it at the start of every inner circle before we move on to the educational content. So you can scroll through if you don't want to hear this, but if you do, of course, you're very welcome to listen into this too. We've seen some weakness in the yen. We're pretty flat this morning. when we did the live market update, this is where we were. But since then, we've seen yen weakness across the board. Very few FX pairs are moving this morning. But if we look at the US yen, some strength in the USD. If we look at the euro, you can see just a little bit of a pullback. We are still sort of range bound, and I think we'll stay in this range until that CPI data. But we'll look at the euro yen. This is looking really interesting. We appear to be breaching or testing a level at 172.88-ish. I don't really like this because I think we'll potentially hit a ceiling pretty quickly. But of course, we may get some movement in this subsequent to that data indirectly. Probably the chart of the day, as far as I'm concerned, is the Aussie yen with that yen weakness theme. We did have a breach yesterday of this key level. You can see on the daily chart how important this level is at 97. It was resistance here through most of July. And of course, we breached it over the last couple of days. Possible price target on the Aussie yen of up to around about 98.58 on the long-term chart. To bring this into the hourly, you can see we're in a really important point now. We've just paused at that resistance there, 97.71. So look for a breach of that trend continuation. This is my chart of the day for FX now. A couple to watch in the US, but of course it will be dependent on what happens next. So one to watch tomorrow on the ASX is NXT. NextDC, a network services company. You can see this was an earnings pop, stuck in a range for a little while, and we had a good move up today. All-time highs on this stock. Sorry, not all-time highs. Highs since yearly highs on this could potentially move up to around about this 1835, 1840 level. Keep an eye on that tomorrow. But I wanted to have a look, not at Zoom, but at Netflix. I just think this stock is going to continue to go up. You can see there, we've got a key level to keep an eye on at 1250. Reach over that, could see us up to 1300 and maybe even 1350 pretty quickly. But my favorite stock of all is Nvidia. Again, a short-term pullback. We've got a clear line in the sand here. That is a stone throw away, about less than 2% away from key level at 180, 182. So just watch that subsequent to CPI. You can see in the extended hours trading, it is already up, but that will move based on what that CPI data comes out an hour before. So maybe check in with that pre-market as well to see where it's at. So there you go. There's some things to have a look at. Keep an eye on gold subsequent to that CPI data. I like the Aussie yen and maybe Nvidia when the US opens. Right. Okay. I hope that's been interesting, giving you some things to think about. Gert, I agree. It is a massive disgrace. It doesn't matter which side of the political divide you are. It is a tragedy. So I agree completely, Gert. But no lesser tragedy with the 4 killed at Colorado school within 1 hour of the Charlie Kirk incident. It's just gone mental over there. And I don't care about Second Amendment rights. They need to do something about gun control over there. Completely agree, though. Right. Okay. So let's start by looking at asking the question about an automated approach. Now, there's a polarization in this. A lot of people who wave the automated flag say, why are you discretionary trading? Use this. If you're a discretionary trader, a lot of people wave that flag and say, you can't possibly do automation. So the reality is that I've never talked about automation being a substitute for discretionary. It's a supplement. It's your choice then where you go next. But that's the way I've always viewed it. And one of the key things about automation is that just about everybody who trades uses some degree of automation. Irrespective of whether they're using full EAs or not, We use system stops. We use trails. We use system trails, even though they're not very good. We use take profits. We use pending orders. They are all examples of automation that discretionary traders use regularly. Arguably, the majority would have stops in place and take profits in place as a minimum, even if you class yourself as a discretionary trader. So what we're talking about now, or what we're talking about today, is really taking that to the next level, potentially. So not going the whole hog and going all in with automation, but rather looking at, as I said right at the start, looking at a hybrid approach. Now, there are psychological challenges, of course, of using or choosing not to use automation that must be addressed in either case. Arguably, in years and years of coaching people like you, the major issue that discretionary traders have is after they get into a trade. Maybe you've got a little bit of an itchy trigger finger sometimes, but then it's once you're in the trades that the challenges often occur. Obviously, automation takes that away, but then you've got issues that the move from discretionary to automation. I wrote an article on this some time ago. And let me just see if I can. Let me just see if I can find it, and I'll give you the link. Give me a second. Let's do a search. Oops. No, I don't want to open CFD account, thank you. Right, let me just do this. There's the latest article over it. Let's have a look and see if we can find it. Okay, let's. There we go. Okay, so have a read of this. If you get a chance, even if you're interested in EAs, then you need to look at this anyway. Or if you're currently an EA trader, this is. Sometimes you write an article and you think, yeah, that nailed it. That's different. That's innovative. That's good thinking. This was one of those articles. I'm going to post it on YouTube as well. Just give me a second. But it does, because it's very, very different. There we go. Post it on YouTube as well for you guys on YouTube. So some who wave the EA flag will tell you, oh, it's great. It removes all the psychological challenges. Rubbish. It doesn't. It's different psychological challenges. Irrespective of whether you're discretionary, hybrid, or fully EA, the absolute necessity for testing and ongoing evaluation is critical. Irrespective of what sort of trade you are, it's the foundation of building trading confidence in what you're doing, and self-discipline. If you're not confident in your system, you're not going to be disciplined in trading it. The more confident you are, the more likely you are to follow it. And of course, we need effective automation to be able to refine systems to match you and the market more effectively. Remember, it's irrespective of whether you're trading EAs or discretionary, it's your interaction with the market. It's not just about a simple pick list. It's about what you do when you're faced with the market in front of you, or how you choose settings relating to market action. That's one of the reasons we've spent quite a lot of time with the EA side of things, trying to put in things like market regime indicators to pick up what the underlying market is doing and make that as important as the price action that you're seeing in front of you on a chart, or that coding is picking up on a chart. So that's the start point. So when does human intervention make sense? Let's ask that question. So if you're there, so we're expecting CPI data tonight at 8:30 Perth time, 10:30 Eastern time. And we can be there for that. But of course, there's unexpected news that comes across the wires. And that's one of the reasons we put other things in some of the EAs. Things like what's called a handbrake. So that this essentially picks up a significant move if you're not sitting in front of the computer and says, right, okay, something odd is happening here. It's moved more than 2 ATR in one single bar. Let's close it out. So, but obviously, if you're there, then you can intervene as you're seeing it happen. The difficulty is that you may take interventions before the picture is clear, simply because that increased volatility can create a situation where it doesn't feel comfortable. And it's okay to get out if you don't feel comfortable, of course. But there are advantages there, without a doubt. Now, one of the advantages I would suggest of discretionary trading is entry. Fuller chart assessment. So we can see, if we put up a chart, right, we put up this chart, we can talk about context. So we can say, right, okay, if we look at NVIDIA here, what we've got is a stock that's been testing record highs. We had this pullback and then it's going up. But that's the context. If we look at the hourly chart, we can talk about, well, look, we breached a key level here, and then possibly another one here. That could become the next support. Should we get a pullback at this stage? There's maybe a short-term important level at 179, but 181 is where it's at, really, or maybe 182.50. So we can make these little adjustments and see the big picture. We can see what's happening to ATR there and then put it into context. Is it rising? Is it flat? Is it dropping? We can see volume as well. We can put this picture together as we're making decisions on entry. Now, that level of complexity is really, really significant. And so I would argue, and it is referenced in that article that I gave you the link of, I would argue that certainly on entry, the human eye and that being able to see the picture in context is an advantage over EAs. What EAs do, if you do a back test for a couple of years to test a strategy, then what you'll find is that it's taking, and you're looking for great metrics. You're looking for an average. You're looking for, well, okay, we're accepting X, Y, and Z losses, but we're looking at things in a different way. We're looking at probability rather than actual physical price action. So the price action creates the probability with EA or stroke automated trading, and that's not to diminish that either. But in terms of making that decision on the here and now, on this chart here and now, the human eye is really quite, and brain is really quite clever, providing, of course, you don't let psychology get in the way. So do that fuller chart assessment is really hyper complex. So you sacrifice some of that for that probability measure. If the sudden changes in market liquidity, so we get volume spikes, etc., though you can program those in, you've got, again, the context of seeing what that volume spike is associated with. Is it a big candle move? Is it an event? Is it planned? Is it not planned? All of that sort of stuff. And of course, we can see at a glance what the correlation breakdowns between related markets are. One of the things I did right at the start there was talked about how the USD, the US dollar index, was pushing down against support, and that was assisting gold moving up along with the inflationary concerns that may come to pass with tariffs, and that CPI number is showing, despite the fact that some would suggest that inflation is under control. It is not under control. It is sticky, and it may go up from here. We can see all that and put that story together, which is, again, very, very difficult to get that full context through EAs, although we are making moves on that, which I'm really excited about. But another story for another day. So this is where humans rule machines. Machines work on probability and statistical probability. Whereas if you're a human trading a chart, you're bringing in those other, a bit like a crime scene, bringing all of those, looking forensically at the market and bringing in all of those other things which are difficult to capture otherwise. So does this mean that a hybrid system which combines the advantages or the benefits of a discretionary system versus the advantages of, and add those to the advantages of automation, which undoubtedly on exit, automation is king, not only from the point of view of actually adhering to exits, which are the most difficult part of your trading, the life of a trade to deal with, but also, of course, you're not limited by time or needing to be in front of the screen. If we're in the other 6 months of the year, that CPI data wouldn't be at 10:30 tonight. It would be at midnight, which for most people is not time that they want to be sitting in front of a computer deciding what they're going to do with their open positions or not. Of course, again, and as I'll reference later, we're looking to put something in from an automation point of view, which we can do now with the EAs. We're looking to put that into a discretionary, or give discretionary traders access to that ability to tweak when data is imminent. So what are the common hybrid system architectures? Well, I shouldn't have put the word common because they're not common at all. But the first and most obvious, based on what I was saying, is the combination of a discretionary entry and an automated exit. Now, how do we do an automated exit? Well, I've already referenced you can automate it, do automated exits with the system trail, stop, and make profit. As I said, the system trail is limited in what it can do. And so one of the things that I've been working on over the last couple of weeks is the concept of an exit-only EA. Now, I'll give you a brief insight to this. It's got a couple of wonderful people part of the EA group who tested it out for me. But I'll show you the way it works. So what it does is you can link, if you open a trade, so we can do this. Let's not do it in video because we can't anyway. Let's go to Aussie yen. And where is it? There we go. So let's just open a small position in Aussie yen. Okay. So when we do this, we just enter a position as normal. Okay. So buy market. Then what that does is it creates a trade. So you see that trade there. Now this is the important bit. This is the important bit here. This ticket number 309-56947. Now, of course, we can put our stops in. We can put our take profits in, and then we can sort of right click and put in a trailing stop like so. But this exit only EA, sort this out later. Move very much for right now. This can do it all for you. So what we do is we can use the ticket. We've got true or false. If you click that on false, it doesn't use the ticket. It does the same settings on every, and you can set the settings. So we'll put our ticket number in there, and if you want to time exit, so with that CPI data, you might choose to exit before it's on. So we might say true. And if we look at platform time, we put the platform time of that in. If we want an MA price exit, we do that. We go on touch maybe make it 30 EA, and then we might have an ATR based take profit and stop. We can have a partial close. So if we want that, we can choose to close 50% down when it's 50% towards the take profit, and then we can trail it one ATR above break even. So we make profit on the half we've closed down, and it continues with that. We've got a MACD exit setting, which is based on the signal line crossing the histogram. A SAR exit, which is, for those of you not familiar with a SAR exit, if we put it on, we put it on here, standard SAR exit. So standard SAR exit, if we were along this trade here, you can, once it's 1 or 2.3, you can choose to close it out. So when it's changed trend, then you can be out of there. If you're reliant on a stop, it might be here you will get out with the MACD. Let me show you that just very quickly. With the MACD, the exit would be a signal line over this, over the histogram, so we'll be out at that point there. So the same as SAR.2. If it was, so you see you'll see the sort of idea there. So you can tick the exits you want, set the settings you want, so it's all under your control. And there's the handbrake, and there's a maximum give back there. So if we didn't want to give more than 10% back, or let's say 30% back of our profit, we could set that. We could say trigger that, start operating that when you want ATR up. We'd set this at, let's say, 5 minutes and 15 minutes. And there you go, there's your exit. So you can choose the exits you want, and it will manage those when you're not watching the screen. So you've done your discretionary exit, and now you can let the EA take over. And at any time, you can sort of click this to false if you want. If you want to take it back over, you click it to false. So this is when you're not there. You want to go to bed. You want to go to the pub with your mates. You want to go out for take your beloved out for a special dinner. You don't want to be watching the market or checking it on your phone. So you can just get this to manage it for you, and away you go. So that's an exit only EA. What do you think of that, guys? Make some comments in the box. Is that a good concept? So it allows you to stay in the trade, but how many times have you been in a trade, you've set your stop, you set your take profit, you woke up in the morning, you see it did really well early on in the session, but the number of times it turns in the midpoint of the US session and gives away all your profit because you're not there to watch it or try to stop up or whatever it is you do. How many times have you seen that? Is that frequent? And of course, it takes away the FOMO, it takes away the early exits because you're getting a little panicky because you haven't made profit for 3 trades and this one's in profit. So this manages it for you. But it's based on that ticket number. Good, I'm glad you sort of like the concept. Now that's been launched formally next week, by the way. Just keep 100% a good idea. Thanks, Rob. So it's there and it's completely in your control because you can control which exits you stick to true and false, or the overall override is you have it running or not running by clicking this true or false. And of course, you've got to have the algo trading on. Ideally, your computer would have to stay on or use a VPS, but you would this is hybrid trading at its best, I would suggest. So I hope that concept makes sense. Now, this isn't the only place we can go with this, of course. I've already referenced economic data. So we can put in something that says, do you want, I'll just show you an EA which we're testing data out at the minute. So if we look at the inputs for this, I'm not going to go into the full EA. There's a fractal breakout model. But what we can do is if we've got the CPI coming up, you can just click all these to false, apart from the CPI. Actually, the ECB rate is coming as well. So we might click that on true as well. And then we can choose what we're going to do. We're either data manage it or don't data manage it. We can stop opening trades 30 minutes before and resume afterwards. We can do a partial close. If there isn't one set, it can flip that to true just for this time, close it out, trail the stop up. We can do the maximum give back. You can change your maximum give back setting on that. So this is the next hybrid. This is the next stage, adding this into that exit only EA. So it can manage data releases automatically. So you don't have to pop up, set your alarm at midnight, get up for 6 months of the year. And decide, well, what am I going to do with my trade? It will do it for you. So that's, again, hybrid discretionary exit, automated exit. Then, of course, there's the flip side of that. We can do automated entries and discretionary exits. So what we can do is we can do an automated entry, and there's two where it will enter for us. The number of trades I'm sure you'll have seen that you've missed because you've been sleeping overnight. Obviously, a lot of the action occurs in the US. So we can do exactly the reverse of that. So we can do a fractal breakout. So that would sort of, let me just show you what I mean by a fractal breakout. So the setup for a fractal breakout would be, let's pop onto the let's pop on something. Okay, so this would be a good fractal breakout trade, actually. Okay, so fractals. Let's make them yellow so you can see them a bit better. A bit further. So what we would do, so the key to a fractal breakout is it looks at the last fractal high, which was this one. And first question it asks, is it above that? Yes, it is. It's got to be above the 14 MA. So change this to a 14. This is the way it's set up. We can obviously change these settings to match your own individual trading style. We'll get rid of that. Okay, and it's also going to be over the 200 MA, which is there. So does this work? It fits the criteria. It's above a fractal high. It's over the 200 MA. It's over the 14 EMA as well. So you can set that going and say, if this happens, there can be one of two things. There can be you can either get sent a notification to say, hey, look, go and have a look at this. There's a setup going on here. Or so the way you would probably do that is with a scanner, which I've got an FX scanner now, and what I'm doing is reprogramming it for various things. And what it does is when something goes green, 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 then it will do that. I wonder if I've got it on here. I'm sure it's on this computer. Just have a quick look. I think I have. No. But what it can do is it can look at, let's say, 27 pairs. It could be all your majors and all your minors, and say, right, okay, this is 4 greens. It's met our 4 criteria. Send a notification, which of course you can do in Chrome. Does that sound good? And then you can have. Great question. Yes. So the way it works, Jason, is exactly that. So you can give it multiple exits, and it's whichever hits it first. Yeah, that's what will trigger. With the intention to choose which exit entry. You can do either, Ian. So Ian's question is, do you choose which exit to use at entry, or change it along the way as the trade progresses? So you may decide a entry to put in your a take profit, stop loss, and a trail based on an MA price plus. And then you see, oh, I've actually made quite a bit of profit here. What I'm going to do is I'm going to put in a partial close as well. Those of you working with the magnetic trading as they were then, they used quite a lot of partial close in some of their trades. I don't think the trail will stop up to break just above break even, but that's the idea. So yes, you can. And again, you can choose to take full control if you choose to, or you can set it to, if you like, automated control, and then because you're out for 2 or 3 hours, so it manages it when you're not there, or it manages it overnight if it's a slightly longer term trade or longer time frame trade. So you sort of sleep at night factor is increased, and then of course you can take back the reins in the morning, adjust positions accordingly. Should we look to have 3 trading accounts, 1 for discretionary, 1 for hybrid, 1 for discretionary? I think there's certainly merit in that. It's actually a really good question. Certainly separate your fully automated from your discretionary, would separate that, absolutely. With your hybrid system, logically, perhaps that would make sense. It just makes it easier to manage, because imagine you can sort of say, right, okay, I'm looking at all my breakout strategies in my completely discretionary trades. I'm looking at all my breakout trades within my hybrid account, which does better. The disadvantage with that is it wouldn't take long before you might be tempted on your discretionary account to just put an exit EA in, just because it's a good thing to do for you for the right now. A far better approach would be to be able to identify that and there's a way of doing this. I just need to find out what it is to be able to run a report that says this was an exit only. This was an automated exit rather than a manual exit. Okay, there's a way to do that. Let me just show you something that I've been working on. I was going to talk about this later, but I just want to see if I can find it. Oh. I thought I'd done it. That's the exposure, I did run one before, but I've lost it. Oh, here we go. Showing you performance. Right. So if I open this, so what this is a script, okay? So it sits here. In here, these are all scripts, and these are evaluation tools. So you can click, it takes about 30 seconds to do. If you open a trade, you'll see in here there's a comments box. Now there's an EA version of this. This is the discretionary version. So we can type breakout in here. Okay, and we can buy by market, and that will save that comment. And if we do that on every trade, what we can do is we can then produce this report. Now this is just some dummy trades just to test out the system. So I looked at three trades, three strategies. So you put that strategy in, you can see how each performed, and within each strategy you can see. So here's the breakouts. So you can see what did well, what didn't do well by asset class. Okay, you can group those together, you can do all that sort of thing. So this is a discretionary tool that allows you to get that performance data in seconds. Now, what I'm thinking is I could put another function in here, another bit of code that sort of identifies whether the trade was a manual exit or an EA exit, which would be your automated exit. And so then you can subdivide and compare one versus the other. So your breakouts with manual exit versus your breakout automated exits. Wouldn't that be good? So now, as I said, this was all to do with testing. What I'm going to do is I'm going to do a fuller test. I've got a couple of people testing this out for me already. But remember right at the start, what I said was evaluation, performance evaluation is absolutely critical. And you can get this at a click of a button, or you can do the reporting. It doesn't give you anything that you need. But look at this. It gives you the drawdown. These haven't lost yet. It gives you the maximum drawdown. It gives you a Sharpe ratio. And it gives you the number of assets that have been traded under each. You can even sort it when you run it. You can even sort it by, if you just want to have a look at your US yen trades and look at how they perform with different strategies, you can even do that. So, and the way to do that is you can, if you want to do specific assets, you would just put that in there, run it, and then it would You put in your strategies up here, you break out TC reversal, or whatever you choose to call them, and it would run that report just on USD yen. So you can say, right, okay, my breakout strategies on US yen are rocking. My reversal strategies are awful. So let's not do that anymore. Or let's revise the trading plan relating to that. As a discretionary tool, that's magical in terms of informing you about what works, what doesn't. Because what we tend to do is we tend to look at our bottom line, overall profit loss of our account. We don't tend to look at, well, what is contributing well to that? What is taken away from that? Is there anything else we can do accordingly? Does that make sense? I'm glad you like it. Anyway, signal filtering system is time to get in, time to get out. So this is more, I'll talk about that in a bit more open. And then, of course, there's the ability to switch the whole system on and off. And so we're using the same MT5 architecture to provide that effective and efficient performance evaluation as I've just shown you. So permission-based framework is rather than trading for you, it is a I'm sure discretionarily is a word. I'll put it in. Is a way of sending notifications when things are happening. So go and have a look at the US yen. Go and have a look at go and have a look at gold now. Go and have a look at. So again, so there can be a traffic light system. It can be green. It can be yellow. That it might be okay. Maybe with a bit of caution already is no trading. And of course, we do it on measure market conditions. I wish I could find that scanner, by the way. Minimizes trading during unfavorable conditions. So we can put a market regime. Some of you will have seen this. If I can find it, just an indicator. I really need to sort this out, and I'll say that every time. So there's other tools you can have, like pivot scanner, pivot tools, and all that sort of stuff, which can go on. Those would be all part of your discretionary thing. But again, what we can do is we can get to keep an eye on the pivot levels and send a notification to say, hey, pivot being breached. That's pretty easy to do. Swap calculators. There's all sorts of things that have been developing of late. Swap calculator calculates the swap on a particular trade. If we wanted to do the euro yen, it would calculate the swap. If we entered this price on one lot, click on calculate, will give us there. It's obviously an old version. Exhaustion. What did I do with that? To that another. There's the 6 regime, the market. There you go. So that shows you market regime. So the 6 market regimes, it shows you when a switch is happening. So you wouldn't want to go long when it had just done a trend down high volatility, or even trend down low volatility. So what it can do is a scanner will look at this and say, hey, this, and this condition are met, but it's caution because it's not in a favorable, it's in a range-bound overall trend. So just be aware if you're going to do that, and it can send you a orange notification, if that makes sense. So this creates some structure and a notification whilst preserving the flexibility that discretionary traders like. And then there's the Sentinel concept, which keeps an eye on things from a margin point of view, keeps an eye on things from if you are using a BPS, keeps an eye on how your BPS is doing, keeps an eye on exposure, particular asset classes, so you're not putting yourself at risk, and particularly important if you're trading multiple accounts. Can be your data manager, as we've done. So it can almost be if you like, the sentinel or the element in your room to say, hey, look, I've got your back. I'm going to keep an eye on things, and I'm going to send you notifications when stuff's going on that you need to know about, and the impact it may have on your portfolio, your whole trades, not just your one trade. It'll potentially close trades down when there's a black swan event. You get a significant shift away from your equity. So you could set it to say, right, okay, equity drops 10% in an hour. If something major is going on the planet, let's just cut it all off. Notify us, and then we can come back, take a breath, and make those decisions from well, what are we going to do next? So there's everything like that that we can put in place for, and that doesn't matter whether it's an EA or a discretionary trader. Those systems can work on both. So yeah, that discretionary entry, automated exit. So just to sort of reinforce it. So what we're doing here is we're leveraging human pattern recognition for entries and using that exit only EA or exit only algo for this exit management, because humans are good at complex patterns, market inefficiencies, or contextual setups. And then we've got the management of the position, plus the other things that we can integrate things like data management in this going forward. So the benefit of this is capturing that human edge, which undoubtedly exists in discretionary trading, because as I said, it's looking at the market differently than an EA. An EA looks at the market from, as I said, a statistical probability point of view over time, whereas the human looks at that trade right now in its complete context. Of course, there's still emotional biases that can creep in an entry. And it may be that you look at how you're trading, your history of trading, and you can say, well, look, this is my major drawback. I'm getting in too late, or I'm getting in too early. Therefore, I need the automated entry, discretionary exit side of things. Or it may be that I'm just messing it up once it gets to exits. And so I need the discretionary entry automated exit. So that's where I'm going with this. What I'm going to do is, obviously, some of this is within Go Market, some of this is with my other hat on. But if you're interested in any of this, and you've got any questions, then pop me an email. If you've got my other email, then by all means connect with me on that. As I said, I'm releasing the exit EA next week. But if you just want to pop me a line from a Go Markets point of view, you're not part of the other scene, then ask questions. Give me some feedback. What do you want? What is it that you think would be useful to you to enable you to trade better? Bring in some additional automation on what you're doing already. There's a few questions there. I'm going to answer them in a minute. I'm just cautious. Okay. So the performance analysis measurement is critical. I've covered this. I've showed you one way of doing this. There's other ways you can look at your margin usage, which helps you determine account size. You can look at when you lost your trading, which can help pay for your VPS essentially, or decide what VPS you are entitled to and get a full rebate. You can, but whichever way you slice it, you track one versus the other. So the other thing I'm working on right now, which should be finished next week, is a comparison tool that says, that gives you the what would have happened if scenario. So, so what you can do if you're not confident about it, or you want to compare one versus the other, then you can compare your discretionary exits versus what would have happened if you'd used discretionary exits A, B, and C, for example. Why is it a bit slow in terms of moving forward? Yeah. So, and then of course, what you can also do if you're choosing the automated entry side of things is you can compare actual trades to versus shadow system recommendations. So you don't go and trade them. You almost trade them on a demo and say, right, which of these could I have actually entered? And if I compare what I could have actually entered because I'm in front of a computer versus what an automated entry could do, then which would perform best? So you can start to identify, again, if you do the performance management, you can start to identify what type of interventions add most value. So which of those 8 exits is the best for you? So you can do an analysis of that. There's ways to do that. Obviously, different underlying market conditions is a really important factor in terms of performance. So you can start to filter out. Again, you can do there's ways of doing if you like, retrospective evaluation of what would have happened if you'd applied a market regime to your set of trades. And of course, it helps avoid pitfalls when you've got unclear boundaries or lack of objectivity or over complex systems. If you've got things that can measure the things that are difficult to do and you never have time to do, let's be honest. I've been banging on for the best part of 20 years, talking to people like you about the advantages of having a journal. And yet my best guess is that less than 20% of you will keep a trading journal. All you're interested in is running a report that tells you how much profit loss you made overall. And the reason for that is not because you're lazy, not because you don't see it's important. Most people who I talk about journaling see the merit in performance evaluation of some description. People just don't have the time to do it to the degree you need to be able to make decisions going forward on what to refine in your system and whether something is worth dumping at all, or whether something, of course, is worth pushing the foot on the accelerator a little bit. Now is the time to scale because I've got evidence that trading a breakout on FX using this system is actually really good and works for me a lot of the time. We don't have the time to do that. So using the technology that is here now is the revolution. That's what hybrid trading is all about. It's about moving to what was to something that's going to serve you well. Whatever you're doing, whatever your lifestyle choices you want to make on a day by day and intraday basis, you've got something that has your back. That's what it's important. That's why it's important. So if you want to, you need to stage it. So define your edge and your key decision points. What is it you want to work on? What is it you want to develop? And of course, is it entry or exit automation or just a performance notification or just a mission-based notification? So one of the things that I think is probably 2 or 3 months off is something that notifies you on a phone that, hey, this fits your entry criteria, that you've asked this scanner to have a look at. This is happening now. Then you'll be able to check it on your phone and just click a button that says trade it. Now that may work, and then apply the exit EA to it until you get a chance to properly sit down and have a look and say, right, how do I want to manage this? It could be overnight you automate entries and during the day discretionary enter. So develop some simple permission criteria saying what's going to work and when's it going to work. When do I want it to work? What do I want switched on? What do I want switched off? So the critical thing about this is that you still are in control. Even if you're not in control of when it happens, per se, in that you're not clicking the button, you're defining absolutely when those actions occur. Everything there's no black box hidden stuff behind the scenes. Everything that's adjustable is in those inputs that you saw me show you on the screen. We create a proper tracking system for performance comparison, and then of course you can gradually refine your systems and your behaviors based on your actual results, based on performance evaluation that is meaningful, not just simply how much profit did I make in my whole account. That's the, if you like, those are the 5 phases, and with the tools that are developing, then that is actionable to some degree right now. So have a think about this. Have a think about what sort of hybrid trader would you like to be? Is it worth trying it out? Is it worth giving it a nudge and saying, well, look, does it work? Does it not work? Try it. Your discretionary on a live account, and then run a exit only EA on a demo account, mirroring exactly the same trades. And there's a way we can sort that out as well. So we can do a signal mirroring from one account to another, and you can then add the exit EA to the other, if you like. Not only to test out whether the exit EA is working as you want it to, but also to give you that absolute comparison. Now, I know there's differences in data between demo and live, but generally speaking, it's going to be pretty close in terms of giving you that answer to that question in terms of whether this is worth adding to my trading toolbox, and under what circumstances would I want to do that. And then, of course, you can expand to additional instruments, different strategies. So you can look to, and then, of course, there's adding, so plugins on top of that. For example, the exit EA, there's a couple of things that are plug into that, which are the maximum give back and the handbrake, both plugins to that original system. And of course, there'll be all the user guides and all that sort of stuff to show you how to set it up. It's not hard, it just requires knowing what to do. So there you go. So go away, have a think about this. Drop me a line if you're interested. As I said, those of you who are part of my other scene, part of my other hat, you've got other access to me as well. So you guys feel free to do that. As I said, this is a revolution, and I want to lead it. I want to make sure that the people that I work with, the people that rock up to my sessions, people that I work with more directly in courses and stuff like that, they get the opportunity here to do what nobody else is doing. If we look at what a trading edge actually is, by definition, it's giving you an advantage over other market participants. Is this the thing that can help you do that? That's the question. And even if you're not sure whether it is or whether it isn't, is it something that really do you make the choice to try it out or not make the choice? That's where you're going to be in the next little while. So have a think about it. Let me know and ask questions or challenge things. Drop me an email. Let me know what you think. Your feedback is critical to how this develops over the next few months, for what's in place now and what we add later on. So take the first steps, and the first step is to ask that question. Jot down some notes. Don't make this another session that you just think, oh yeah, that was interesting, and away you go. Make it a session that you do something from. That's what I would suggest. Anyway, that's me done. I'm just going to quickly have a look at questions and just make sure that I've answered everything. Thanks, Mike. Go Arsenal, absolutely. Thank you very much, Ian. I'm really trying. I do believe it's next level. I don't think there's anybody else that's doing this. And I want you guys, because you've been part of my world for a while. If you look at why I educate, it's because I want to make a difference. It's as simple as that. And if I can find something or test something out with you guys alongside me in this community we're developing, then that's gold. That's it. And as I said, I'm really reliant on your feedback, your input, your ideas to make sure that what we do here is focused on what you need, not what I think you need. Thank you very much, everybody. I hope that has given you a thought. Thank you for all your kind wishes. Thank you for all your nice comments at the end there. I'm just going to pop onto YouTube, maybe make sure that I've not missed any questions there as well. If you are watching on YouTube, don't be shy and hit a like and subscribe. And thanks very much, Sonia. On the way out, it looks as though we're good. It looks as though we're all done. Thank you very much, ladies and gents. You guys trade safe, take care. Watch out for that CPI number later on tonight, as I said. It's going to be really interesting. John, you're so welcome. It's been a pleasure to have you here, buddy. You guys take care of yourselves. As I said, drop me a line on the email address, mike.smith@gomarkets.com. If there's anything I can help you with, any thoughts you have, love to hear them. You guys take care. See you soon. Bye-bye for now.